Now you might be wondering, what's the secret sauce? What's the one investment that's almost like having a money printing machine in your basement? Well, it's not as glamorous as a tech IPO or as mysterious as cryptocurrency. It's simpler, more reliable, and it's been a cornerstone of my own investment philosophy for decades, the S&P 500. You see, the beauty of the S&P 500 lies in its simplicity. It's like owning a tiny slice of the biggest and best companies in America. When these companies thrive, your investment thrives. It's a bet on American ingenuity, innovation, and the enduring strength of the U.S. economy. Over the long haul, the stock market is a pretty good reflection of American business, and American business has done remarkably well over time. And there's no better, no simpler, and I think, no safer way to partner with American business than through the S&P 500 Index Fund. Now let's talk about diversification. You know the old saying, don't put all your eggs in one basket? Well, that's especially true in investing. The S&P 500 is like that sturdy basket holding 500 of the largest publicly traded companies in the U.S., spread across various sectors. Think about it. You've got everything from technology giants to healthcare providers, from consumer goods to financial institutions. This diversification helps spread your risk. If one sector hits a rough patch, chances are others are doing just fine, helping to cushion your overall portfolio. It's like having a team of all-star players on your side, each with their own strengths and weaknesses. Even if one player has an off day, the team as a whole can still win the game. That's the power of diversification, and it's built right into the S&P 500. Investing in individual stocks can be like trying to pick the winning lottery ticket. You might get lucky, but the odds are stacked against you. With the S&P 500, you're not betting on a single horse. You're betting on the entire Kentucky Derby. You're participating in the broad growth of the American economy, and that's a pretty good bet to make over the long term. Remember, in investing, slow and steady often wins the race. When you invest in the S&P 500, you're not just buying stocks, you're buying a piece of the American economy. It's like having a front row seat to the innovation and growth happening across various industries. The companies included in the S&P 500 are carefully selected to represent the leading sectors of the U.S. economy. From technology giants like Apple and Microsoft to healthcare leaders like Johnson & Johnson and United Health Group, you're invested in the companies that are shaping the future. This broad representation gives you exposure to a wide range of industries, which is essential for long-term growth and stability. As the U.S. economy evolves and new sectors emerge, the S&P 500 adapts, ensuring you're always invested in the companies driving progress. Think of it this way. The S&P 500 is like a diversified portfolio of America's most promising businesses. By investing in this index, you're essentially partnering with the companies that are building the future. And that's a pretty exciting proposition. So, if you're looking for a way to participate in the growth of the American economy, the S&P 500 offers a simple and effective way to do just that. Thanks for watching. If you like our channel, please subscribe now. Now, let's talk about everyone's favorite subject, returns. Over the long haul, the S&P 500 has consistently trended upwards. It's not a straight line, mind you. There will always be ups and downs, periods of volatility, even bear markets. But over time, the American economy has this remarkable ability to innovate, adapt, and grow. And the S&P 500 reflects that resilience. It's weathered world wars, recessions, and all sorts of crises, and it's come out stronger on the other side. Now, past performance is no guarantee of future results, but it does give us some valuable insights. And what the historical data tells us is that the S&P 500 has been a remarkably consistent performer, delivering impressive returns for those who are patient and stay the course. Of course, there will always be those who try to time the market to predict the next crash or the next boom. But let me tell you, trying to time the market is a fool's errand. It's like trying to catch lightning in a bottle. The best approach, the approach that served me well over the years, is to invest steadily over time, ride out the inevitable fluctuations, and let the power of compounding work its magic. Now let's talk about something that's near and dear to my heart, costs. You see, in investing, just like in business, every dollar you save on fees is a dollar that stays in your pocket, working hard for you. And that's where S&P 500 index funds really shine. They're incredibly cost-effective. You see, actively managed funds, with all their fancy research and high-priced analysts, often charge hefty fees. and those fees eat into your returns year after year. Index funds, on the other hand, are passively managed. They simply track the index, keeping costs low. And those low costs can make a huge difference in your long-term returns. It's like the difference between paying retail and getting a wholesale discount. Over time, those seemingly small differences in fees can compound into a significant sum. So when you're choosing an investment, pay close attention to the expense ratios. Lower is always better. Remember, in investing, it's not just about how much you make, but also about how much you keep. Now you might be thinking, investing in the S&P 500 sounds awfully passive. Where's the excitement? Where's the thrill of picking individual stocks? And I understand that sentiment. But let me tell you, there's a certain beauty in simplicity. A passive investment strategy, like investing in an S&P 500 index fund, takes a lot of the emotion out of investing. You're not constantly checking stock prices, second-guessing your decisions, or chasing the latest hot tip. Instead, you're investing steadily over time, letting the market do its work. It's like planting a tree. You don't dig it up every day to see if it's growing. You nurture it, you give it time, and you let nature take its course. Passive investing is about discipline, patience, and a long-term perspective. It's about tuning out the noise and focusing on the fundamentals. And over the long haul, that disciplined approach can lead to impressive results. Remember, in investing, it's not about beating the market. It's about achieving your financial goals. And for most people, a simple, low-cost, passive investment strategy is the most effective way to get there. Now, let's talk about one of the most powerful forces in investing: compounding returns. It's been called the eighth wonder of the world, and for good reason. Compounding is like a snowball rolling downhill. It starts small, but as it gathers momentum, it grows exponentially. In investing, compounding means that your earnings generate more earnings. It's like earning interest on your interest. Over time, even small amounts of money, when invested consistently and given time to compound, can grow into a substantial sum. The longer you let your money compound, the more powerful the effect becomes. That's why it's so important to start investing early, even if it's just a small amount. Time is your greatest ally when it comes to compounding. Think of it this way: the earlier you plant that tree, the more time it has to grow into a mighty oak. The same principle applies to investing. The earlier you start, the more time your money has to compound and grow. So don't underestimate the power of compounding. Start investing early, invest consistently, and let time work its magic. One of the best things about the S&P 500 is its accessibility. You don't need to be a Wall Street whiz or have a mountain of money to get started. Investing in the S&P 500 is as easy as opening an account with a brokerage firm or through your employer-sponsored retirement plan. There are countless low-cost index funds and ETFs that track the S&P 500, making it incredibly easy to invest. You can literally buy a piece of the American economy with a few clicks of a button or a simple phone call. This ease of access has democratized investing, making it possible for anyone to participate in the growth of the stock market. You don't need a financial advisor. You don't need to read complex financial statements. You just need to take that first step. Investing in the S&P 500 is like joining a club that's open to everyone who's willing to learn the basics and commit to a long-term approach. And the rewards of membership can be life-changing. So if you're looking for a simple, accessible, and effective way to grow your wealth, look no further than the S&P 500. It's a powerful tool for building a brighter financial future. Remember, investing isn't about getting rich quick. It's about building wealth steadily over time. It's about participating in the growth of the American economy and sharing in its success. The S&P 500 is a powerful tool for achieving your financial goals. It's simple, it's effective, and it's been a cornerstone of my own investment philosophy for decades. So do your homework, choose a low-cost index fund or ETF that tracks the S&P 500, invest consistently, and let the power of compounding work its magic. Remember, the best investment you can make is in yourself and your financial future. Thanks for watching. If you like our channel, please subscribe now, then you will not miss any videos in the future.